start. All right, what's going on, guys? So this is going to be a scan for what I'll be looking at in the market through the week of January 20th, which the market is actually closed tomorrow. Tomorrow is Martin Luther King Day. So we're not going to have an open market tomorrow, but I want to just get prepared with some of these charts that look really nice. And the first being QCOM. I really like QCOM for a few select reasons. One, we've been talking about a lot of the dispersion happening from NVIDIA, as you guys know. And that dispersion happening from NVIDIA is obviously moving elsewhere into obviously some of these other semiconductor names, right? We're getting really nice big pops on INTC through news off of these lows, right? You go over into a name like LRCX, and we're getting a really nice, constructive, strong weekly chart here on LRCX. Why is this not loading? I'm sorry. All right, there we are. So as you guys can see, we have that lower low accumulation look here with LRCX. It's a really, really, really nice looking chart. And this is all actually right into one big retest of this breakout level that is on our weekly, right? So we have a really, really, really nice opportunity, I feel like, with that dispersion thesis as we move forward. Now, is the NVIDIA weakness and weakness that I am expecting, is that going to then obviously make an impact for these other names like LRCX and INTC? Obviously, that's all only time will tell with that, right? We have some other charts with over here with NVIDIA, or I'm sorry, AMD, that are really, really, really nice in my opinion, but I don't necessarily know how long of an accumulation we'll be building here. I do think this is going to be a 2025 setup, but as of right now, my focus is more towards QCOM and LRCX, right? QCOM, this is one of the nicest weekly prints that we've actually had on the name ever since August 5th over here. The volatility has been very dry with QCOM, and we've never really had a plus 5% week. The volume is actually increasing as we make a break through this downtrend that we've had all the way since the all-time high, I believe. So we have a lot of targets also for the upside. With a chart like this, I always talk about how whenever you have such a coiled range on your daily and you're getting so much consolidation from here throughout August all the way over here into November, once you find that low, that is obviously a breakdown failure followed by a pop back up into equilibrium, that's whenever you would want to ideally see equilibrium being controlled. And all I'm really doing is taking a gone box. I have my gone box tool because fibs I use for like my entries and my 618s and whatnot. With the gone box, it's more just using the 0.50. I take it from the high to the lows of the extreme, and then I start looking and seeing how the sellers are off of that equilibrium. And it's not always just going to be equilibrium. It's more and less of a range where they were trying to hold it as a support, I should say, over here. And then obviously that was it was a failure for the time being, but there was not a lot of big time sellers off of this range. Actually, where most of the volume kicked in at was a shakeout on the external low here at 151.39 with a lot of volume behind it, and then we popped higher, volume dried up throughout the holidays, we found a higher low, and now we're finding the continuation attempt here with a higher low, two higher lows on the daily chart, back up into equilibrium. Also, like I said, just right off of a daily level that is very, very critical, very important to obviously maintain and control throughout the week moving forward, right? And that's why I really like this chart in the window of execution, just because we've been getting our higher lows. We actually do have an inside bar right off of a resistance here now, and we do actually have a report January 29th. So I would like to think that I could probably take like an earnings run-up trade and then just kind of evaluate that into the earnings. I'm not a big fan of trading things that are around the earnings, so I might just set this one aside until we get through that report, and then if we could catch a flush trade on it, that would be fantastic. If not, it's not a big deal. But QCOM will have my focus over controlling this range. If we could get some sort of like easy little intraday trade. I'll probably have to take expiration through the earnings, right? But if I could catch a little bit of continuation into the report and then maybe hold some through the report, that could be a really nice swing trade. For, I would just say, runners. I don't really like holding any meaningful size through a report, but yeah, I mean, this thing I think can obviously be very primed to go see into the 180s. So that's going to be a chart that I'm focusing for quarter 1 of this year. Another one that I have on my mind would be Oxy. The reasoning as to why I like Oxy is, one, we have a lot of inside bars here on our daily chart, right? This is 1, 2, 3, and 4 inside bars. We're getting past the window now of January OPEX, right? That's where the market could obviously continuously and gradually transition a little bit more to the risk-off state, right? And I've been talking about this for a very long time, but the chart still looks good. So obviously, optimal fills with Oxy were on a reclaim of 50, maybe somewhere down here after we saw the sell climax happening on the weekly chart, right? With the 1, 2, and 3 lower low accumulation with all of these volume patterns coming in and a lot of volume pouring into the lows on a name where it makes a lot of sense, right? We pulled down into a window on in the market. Same with the XLE Energy Fund, where we pulled down for a window in the market to obviously transition its rotations a little bit, and we're starting to see the stagnant signs over here in some of these tech names, right? So NVIDIA is going to be another focus of mine. I really like this chart just because the bid, ever since we tested all the way down into 130, as you guys can see, there's really not any true strong constructive strength here on this 5-day series of candles here. This is actually all of the trading action of last week. So basically, this is just looking like one larger kind of daily bear flag, I should say, but I think it could retrace a little bit higher, right? I'm not a big bear flag guy. I don't really like to trade patterns. I'm not that kind of guy that says, oh, okay, yeah, a bear flag is valid if it keeps underneath the 0.50. I'm more really focusing in on the fact that if you're looking at the swing high, you're looking at the swing low. We have the discounted range up here up towards 140, 132. That's also kind of where we broke down from in terms of really breaking down from like higher low structure that was trying to pivot us ever since we filled this 128 gap into a higher low, into one final attempt of a higher low, I should say, off of the June swing high for this to develop higher lows and then a continuation off of like a push off of like reclaiming that level and then go. And obviously that was one big failure, right? So this is actually where we broke structure on smaller time frames. So I'm going to be looking at this thing for like some sort of retest into 141.32. If we go into our hourly chart, I want to see a little bit of a signal on the hourly. However, we are kind of getting that hourly signal. With the hourly, what we have is like a 3 higher high distribution potential here, where smaller time frames are showing that, you know, you're getting a gap up, right? And then that gap up is being faded, and then they're gradually, ever so slightly, pushing it higher on weaker buyers, essentially, as you could see through the price action and volume through these days, into these new highs, and the new highs are being sold, right? So I'm going to be watching NVIDIA above last week's high. I'm going to be looking at this gap. This looked like some sort of like phantom print. I'm going to be looking at 141.32, and if there's no sign of a seller up here early week, then I'll likely just wait a little bit longer for the 618, which is also tying in with this gap. We've already talked about how that could obviously happen, and then we could catch higher lows if this starts getting beneath 140.76, and then we could find smaller time frame higher lows to take it to the bottom of the range again, right? But all we have to do here is just keep monitoring that buyer, looking at the price action, understanding if that buyer has any strength to it, and a lot of size to it. And as of right now, as we can see here, guys, this is seller dominant, right? We're getting major hourly seller capitulation off of the highs and a minus 4% capitulation bar with 87 million volume traded on that hourly candle. And that was the highest volume, and we've never really had any true high volume since, right? And then we have another really high volume hourly candle, which is the highest relative to the rest of the range. basically, and also this gap is also pretty high. So this area in terms of volume profile that's sitting off of, I should say, from the bottom of the gap to the top of the gap, and then these two bars are both sitting around here at like 142-ish. I would like to see a discount at least into equilibrium, which is also where that high volume was all traded from. Could there be leftover orders there? Technically, yes, but I would think they would be a little bit above the 618. So I want to be a little bit passive aggressive, but once I find that clear sign that only the future will obviously tell for us, that's whenever I'm going to be pretty heavy size. I'm going to be looking at some shorter expiration, some further out expiration. I'm going to probably be adding incrementally into like a much further dated summer expiration. I'm going to have a lot of positioning with NVIDIA in terms of the short side. If we could start seeing another big time seller step in somewhere within this range in this yellow circle, right? So it's a little bit wider of a range, and that's why I say you have to be very patient. Because if we're retracing, guys, and you're trying to front run it here, and it happens all the way up here, it's really not that big of a deal to front run here, because the thing is with a lot of these setups, once we find the signal up here, and maybe it goes quick, we could still find smaller time frame higher lows, right? Or I'm sorry, lower highs, somewhere like right here, or maybe, you know, if it pops and then finds another weak pop off of like this level and then drops again, we could find like any sort of smaller time frame higher low, right? So you don't want to front run and just buy puts directly right into 140.76. It's not really the best idea by any means, but this chart does not look good. Really never has looked too good, and I do plan on shorting this one. Shorted it last week for, I had a small loss on one short, had a really nice win on another short, so doing pretty well with it so far, not anything too crazy, but the whole chart has not seen a marked down phase that I think we can see with how much force has been shown from sellers and how much they've really shown their hand off of like this January 7th candle. And essentially just one big fat breakout failure, right? A lot of people, I think, were anticipating this thing to see another historical run once it did something like this, and that's just not how things work, and it broke down, and now it's not even a breakout trade. It's now a UTAD and likely distribution. So yeah, I'm going to be looking at that one. Oxy, I never really fully covered yet, but this is a ton of inside bars that we have here. This is 1, 2, 3, 4. Obviously, we have the inauguration, we have the tech expiration. Everything is kind of aligning with a window where if they want to rip the Band-Aid, if the Fed wants to rip the Band-Aid off right now, and they've all been front running and distributing into the next FOMC, and kind of were front running that from a long time ago, and they want to get the pullback in the equity market done with, and then maybe pop it higher, then I think this would be the time and the place, right? Which would initiate probably a little bit more risk-off rotation happening into your names like Oxy. There's still an unfilled gap on the NASDAQ. I think a lot of people are forgetting that. And with Oxy, this is kind of that path of least resistance trade where you have so many tests of this resistance previously. This was the previous floor and the previous major support that was obviously showing us the preliminary signs of accumulation that we're building leading into this window where you have QQQ leaps expiring on the December 20th chain. You have a lot of the open interest in the tech names expiring last week, right? Which could obviously spark a risk-off rotation, like I said. So this level right here is very big, around 52. I believe the EMAs are also catching up to Oxy. They're ever so slightly beneath current price action. So if we could stay really tight in this range and then find a strong orb somewhere on this range, probably an orb that looks something, probably some sort of orb that looks like this, right? But it has a really nice pullback and there's a lot of volume on top of that orb. Somewhere within a range like this, I think that would make perfect sense. I don't know if this has enough consolidation just yet, but like I said, we're absorbing a massive level that's sitting here at $52, and we have a gap fill target all the way up into 54 still. So I can't really let this chart, I can't really let myself lose sight from this chart, just because, like I said, it will tie into some of the tech ideas that I have in terms of the short side trade. I kind of get that feeling with BA as well, right? Industrials actually have some of the best looks out of most of the sectors. XLI is your sector fund. Really, really, really nice chart over here on XLI. I don't know why my stuff's being so slow. It's never like this. XLI had a really nice pullback. If you guys look at your weekly EMAs, because sometimes you need to do that just because it becomes harder to chart whenever things are just seeing strong continuation patterns. And on your weekly, you almost had the breakdown and the failure, and then they just ripped it much, much, much higher. And this is one of the best performing sectors as we had throughout the rip, right? And that's why I was really, really, really liking like MMM. I don't know if you guys remember, I talked about this chart actually in a previous video not too long ago. This was a really, dude, this is getting really slow. I don't know what's going on. There's like something wrong with my computer right now. There's something wrong with TradingView or my computer. Here, I'm going to reset my TradingView. Sorry about that. I will be back in just a moment here. Loading it back up. A virus or something. Okay, now I'm screen sharing again. Okay, we're back. All right. So yeah, with XLI, this is one of the stronger sectors that we've actually had. Obviously, we had a big time gap over here on XLI that needed to be filled, right? And then we filled that. We actually had a very disgusting, not really too not really too nice of a fill of that gap, right? But it doesn't really matter because that was obviously the sell throughout FOMC, I believe. And then into the OPEX and after the OPEX is when we started to see some buyers lift this thing back up and then put in a really nice weekly looking candle, right? So some of the equity that I like within that sector, I was trying to bring up the MMM chart. This was a really high, tight pennant, really nice high tight pennant on like the weekly. It was really just consolidating within this sell candle, and they've absorbed everything throughout that sell bar. And it was basically just coiling and coiling and coiling throughout a lot of market weakness into the point where it was ready to go, and then it found a breakthrough, and it had 2-3 days of continuation from that breakthrough, right? We go over to BA. We had a really nice accumulative base here throughout this like very, very, very like slight drop in the name. And then we had major volume off of the lows, right? That's all kind of front running the fact that these things can see really nice rotations into the next year. This is the same kind of ideal. This is kind of the scenario that we have with QCOM in terms of like earnings, but we're basing on top of the gap, right? We trickled back down into a retest off of 167. I have some calls here actually, and we also have an area on the chart where we need to get above, which is basically the gap down, right? This is technically your gap on the daily chart, right? And it was also a resistance once we actually had the breakthrough beneath. You can see the daily resistance throughout most of 173, 72 here on the BA daily chart, which that's the bottom of the gap, right? So if we could break through this area, something that looks like this, where you're breaking through, and then you're getting a reclaim of 130, 173, 72. We could start shooting all the way back up towards 180.72. And right now we're at 171. I really like how there's absolutely no trading activity throughout most of this range that we've been building here. And I think we're just looking at some sort of weekly high or low here. If you guys take a look at the weekly chart, I mean, the chart looks fantastic on the weekly. I think it's just a big high tight flag on the weekly chart. Volume is really, really, really drying up, right? We never got actually a true retest here yet, but I don't think we need a true retest because we have this gap here. We also have this weekly level that's like sitting right here that we also have reclaimed successfully. So my eyes are on the gap, and my eyes are just on this weekly chart and the structure here and the volume. Everything that kind of aligns with how I trade, and basically also the window that we're in with the relative strength that we have in the industrial sector. So Yeah, that would be BA. That's going to be another focus of mine. Now we move on to some of these other names. I need to check out Roku. Okay, and Roku's not just clean just yet. We'll take a look at a couple other energy names. We have some very, very, very sketchy looking areas on some of these other energy charts, right? We have a big time level to get above, basically, right here. It's through like this weekly level at 164.28. I feel like if CVX can get above that, that can kind of show its hand for the rest of the energy sector. If we could start getting some successful breakouts in some of these energy names, right? We go over to Oxy. We actually just reclaimed the resistance on Wednesday of last week, which is also a big time weekly level, right? So this is your early January resistance that we were actually struggling to get above whenever Oxy was actually one of the weaker energy names, and we successfully got above that and closed a candle above that last week's wick, which is also a big time weekly level, right? So we're now back above that. And if you go to the XLE sector itself, we're actually getting some earnings reports, but we're also in such a big monthly level over here on XLE where, you know, if volatility is in this sector and it's there and this thing is ready to finally get above that area, this can be an absolutely explosive trade, right? I mean, we've been pressing up against this level ever since 2022. So there is so much effort off of this level, but not a lot of result on the monthly chart. And we're just kind of building out those higher lows that are leading up into $95. And now we're into the earnings area on these charts, right? We have earnings with Oxy, I believe, a little bit later, which is perfect. CVX, we have earnings relatively soon at the end of January. ZOM, same thing, relatively soon at the end of January. Valero, really nice looking chart over here on Valero. That has earnings on the end of January. So end of January is a big time for the energy sector. And I feel like through some of these reports that we actually have on the way, that can kind of show us the intentions behind the big money and if they want to remain transitioning risk off, if they want to rotate back into tech after maybe a drop, right? So that's going to be a really exciting thing to see in how the market reacts to the energy reports, what energy does and what energy does subsequently, most importantly. MU is going to be another big time focus of mine. I really like this one for a few reasons. I've talked about the dispersion and the rotation out of NVIDIA into some of these other names, and I feel like this could be a name to trade that has some relative strength if NVIDIA wants to rebound into discount, right? So we kind of want to tie the trades hand in hand because I don't really want to be betting long MU and long QCOM or long any of these outperforming semiconductor names and then also be short NVIDIA. I'd rather just kind of have the NVIDIA short and be ready and be prepared for that and use that as a gauge in terms of like, okay, yeah, like MU, I'm going to have to maybe get out of this soon. I don't necessarily know if a NVIDIA sell would affect these things, and obviously that will show as we move more into the week, right? But I really do like MU. I don't really have an execution spot to think of, but if we can control 104, 105, and if we go into the hourly chart, we also have this high right here at 106.60, right? I feel like every single piece of this chart was fully absorbed of sellers once we got the markdown and the recovery back up into the close of the gap, followed by pretty damn heavy volume off of the close of that gap, as you guys can see right here, rightfully so, because this was a massive markdown on the report of minus 16% with a lot of volume traded. So that is a bear peg, right? But we have to contextualize as to where we actually are on the chart, and this is a very similar looking chart to LRCX. However, it had the fake loss and slippage beneath this weekly level, and then what it did was it got back above, put in a higher low into that gap, and then started to rally its way back higher up into that high volume territory that we've been talking about for quite some time here, off of where the close was of that gap, right? So now we're back into that wick. We're trading actually within the range of that wick, and this is the second test of that daily candle because we traded within that range actually on Thursday, and now we are on Friday as well. And if you go to the weekly chart, it looks like they kind of just soaked everything up that was sitting off of that pretty heavy volume wick that was right there, right? So I think this one could be primed for upper extremes. I don't really know where my execution is going to be off of until we get more into the week. Keep in mind the market is closed tomorrow, so we have a little bit more time to prepare and think about things. But yeah, MU is a really nice chart, and I basically just want to see this one hold like 104. That's basically all I'm really looking for. And if we could get some sort of pullback, I want to see this thing start holding. And maybe it wants to fill the gap beneath 100. I can't see that really happening. If it does, it does, and then we would obviously have a much better risk level in mind here off of like this gap candle, which is also where a previous support was. And now we're back above. We put in a higher low. Maybe we get one more higher low somewhere within this range, but it could also just see the continuation right through this gap level, right? So I think we're soaking this wick that has a lot of volume behind it, and I think we need to see strong buyers commit throughout this area, but it is a really nice looking chart. Nothing that I would ever think about fading, so yeah. Tesla's in a very interesting spot, in my opinion. We have a big time level here. Okay, we're actually above that level, but this is a level that you have to watch on much higher time frames. You can't really look at this level and evaluate it based off of like your daily chart. It's really not possible, right? So we have a huge zone here on Tesla that is basically throughout this whole range, right? If we drag that over, it's a massive pivot level that we've been basing around for quite some time here on our weekly chart, right? We're trying to see who can take control of Tesla off of this area. And it's more than just really this level. I mean, you could technically pull this thing all the way down into here, which was a huge weekly / monthly resistance, right? And we're successfully basing it, right? It's really not a trade that I would look at and say, oh yeah, this is a short. But if they're going to put in a lower high, it's going to happen like this week. It's going to happen like very soon. This thing is not seen enough of a range to distribute. So why would we ever think about shorting this? Does this look like a distribution schematic to you? Because to me, no, it does not. Does it look insane for the long side trade? No, it does not. I just want to see kind of what happens with this one because like we're at such an important level. If we're going to get another lower high, it's going to be very soon in the discount, especially with this wick and actually a pretty disgusting looking close here on Tesla with some decent volume behind it. And if you go to the daily, I mean, that's technically a failure off of a big time daily area. Like we have a resistance here on the daily chart that has been trying to break through for quite some time, and we had a slight unfilled gap here. And basically what we did was we broke through the resistance and then they pounded it into the close and got it beneath 427 daily level. So the chart really doesn't look too good as of right now. It doesn't look horrible, doesn't look great. Kind of got to see if they can pivot it back up above 427, 430-ish again. And if they can, I think I could squeeze in a little long side trade on Tesla. Do I really want to? Not really. Roku got to go off the list. So yeah, I don't know. That's all basically only time will tell with a lot of those setups. Baidu, I just bought Baidu. I don't know if you guys knew, but I said it on Twitter. I think China is going to be a good trade. I do. If you guys take a look at the monthly here on Baidu, you could see how all of these wicks of support are making new lows, right? They're making new lows technically, and they're failing to make those new lows. We have crazy volume from this range actually. Or I'm sorry, no, not from this range. But we had pretty decent volume previously off of this range where we were basing around this area at like 90, right? And then like we found a really nice reversion back for the upside from like 90 all the way back up to 150, however many times, right? I mean, you could see here how this was like 80 to like 107, 115 actually. Over here was 90, 80s to like 350. I'm not saying that's going to happen. I'm just saying this has been an area where we've had some nice reversion off of, especially whenever we're looking at everything that's tying into China. I don't even want to get into that because I'll be talking for a very long time, but it's a little bit of a fundamental thesis that ties into this one, but the chart also really looks good, and that's most important for me. So I really like this, and my risk is off of 79.68. It's just commons for now. It's not anything crazy, but it's hard to trade options on that one. So we'll leave that one go. BE, this thing is kind of a piece of shit, but it looks insane on the weekly chart. Kind of just been sitting around this area. I actually do own commons on BE as well. This is a energy name. It doesn't tie in with like the energy sector in like XLE, but it is an energy name. If I can find one more lower low that's bought into the gap, technically the gap being at 20.95, then that could be a fantastic trade. Or if it just wants to digest around here and then finally break through like this lower high trend that we have on the smaller time frames, then that could be a really, really nice trade as well. But it's all, like I said, nothing that we could really tell until we get later into the week. INTC, going to be focusing this chart as well. So there really isn't much other things that I like. DDOG is one that I kind of like, but the chart isn't showing a buyer down here. And the weekly chart and its weekly print doesn't really look too good. The volume patterns there are definitely there. Actually, where most of the volume is in the smaller time frame ranges would be a gap down into the closure of the gap, right? And then a small pop off of it, but not any of anything crazy, and really no crazy volume yet. This is a big time gap down here, guys. This was a big time gap down from here to here of over 2%. Not really that big, but decent. So I need to see DDOG catch a big time buyer. I do. Preferably, I would like this buyer to come in above the gap, which is also tying in with the gap down, like the top of the gap, and as well as Friday's high. If we could get above that with a really nice buyer, that could be a good trade opportunity. The whole sell and pullback into this big time retest and gap fill has been of low volume, so we just have to wait and see. This ties in kind of like with Snow. I don't know if you guys remember me trading DDOG previously and how I was talking about like Snow earnings and how clean the DDOG chart was when we had the initial breakout all the way over here. But now we're getting that retracement, right? And it's all just being ultimately just really patient. The Snow weekly chart looks absolutely insane, right? This had a huge markup, and then what it did was it pulled down into the peg. Kind of looks like Lulu. And then it got a pop back above, and now we're just trying to see the continuation. It's really not the cleanest looking chart by any means. We're back above those daily EMAs, and basically we're just looking at this thing to continue its way higher. I don't know if they need to pull it again lower into the gap, so that's why I said I need to find a strong buyer or I probably won't touch these ones. If you go over into some of these other ones, we had like the rotations before these ones were like Crowd and like PAMW, and those don't really look good anymore. So those are some really good trades for a short amount of time, right? But where did this money go to? Where are people unloading this, and where are they putting that at? I feel like it could be like your Snow, your DDOG, some of your other names that look like this, right? And these could be some outperformers relative to the rest of the tech sector as well. So I still feel like there's some long side trades. I just don't really want to trust the long side trade with like a lot of the tech, right? Like with NVIDIA, with Apple. Apple don't look good. Microsoft really doesn't look too good just yet. I mean, we do have like some sort of weekly trap candle after it basically was faking everyone out just into a simple like weekly support down here, right? And then they just held that area on that weekly support towards like 411, 412, 410. And now they're back above like that trend line that everyone was looking at for a break. That's why I don't really trade trend lines. That's why I don't really trade. I mean, it's just a simple support bounce, guys. People overcomplicate things, and that's just, big money doesn't care about a trend line. It's a support. So yeah, Microsoft trades like absolute shit, so I don't even know why I'm talking about this one. Amazon would be my only long side trade. The weekly chart, in my opinion, looks really good over here with Amazon. We do have earnings Monday, January 27th, so that is a little unfortunate, right? We have a window where will be in the way. Meta doesn't really look too bad. Did you guys see TikTok got banned? Um, I think that can help out some of these names, but like I said, you don't really want to hold too much of a thesis into all of that new hype. People wait for like the confirmation of it actually being banned. Well, big money has been pricing that into these other equities for a very long time, right? So, but that is interesting though to see that. And then you go over into this other sector. What is it? Oh, consumers. Okay, consumers are the last sector that kind of interest me. I really like this MO one. I was looking at this one the other day. I could see myself trading this one for sure. So it kind of reminds me of John Deere. John Deere was a trade where we had an unfilled gap. We kind of based around that gap. And then once we filled it, which is a big time gap with a lot of volume on that candle, once we filled it is whenever we got really nice continuations higher, right? I would have to buy a lot of time on this name, but we did fill the gap. We based around that gap for a very long time, right? And then once we filled it, we ever so slightly did not fill it, but basically all I'm really trying to say here, guys, is that this would be more of your risk off name as well. If we could find one final last higher low here on the weekly chart, I think it could be a nice move back for the upside. It's not the cleanest on the higher time frames just because we had a big time resistance here that actually had a failure to break and base through that area. So there's a lot that look decent, but not anything too crazy. And I feel the energy sector looks a little bit better. So with that being said, there's also kind of earnings in the way. I'm probably not going to be trading these ones. The only name in terms of consumers that is really interesting me, but there's absolutely no sign, is going to be Nike at the new lows. We have new lows on Nike. The new lows have no strength. This is the most coiled I've ever seen Nike for 6 trading days, I'm sorry. We have moved absolutely nowhere within these 6 trading days. I can't see sellers unless there's news. I cannot see sellers really breaking this down and then getting a retest and then this thing falls way further. I cannot see that. What I can see is sellers kind of fizzle out and the character of price and volume fizzle out down here. And then we just get another low of accumulation and then a reclaim and then a rotation back for the upside with targets that extend all the way up here into the 80s, right? And we're at 70. So could this be a insane trade with further out expiration? I think it could be. And the other discretionary name that has a pullback that looks relatively decent would be McDonald's finally into its gap fill. This range over here was absolute hell, and what we did was we pulled down, didn't fill it, pulled back higher, absorbed more supply off of that pull higher, right? And we've done that for a very, very long time on McDonald's after that E. coli gap down, which was a major overreaction, right? And then we started to get that accumulative looking buyer above the gap down here, and then we popped it back higher, absorbed more supply off of the upper ranges up here at 303.74, and then we pulled back lower, right? And now I want to see if they can commit to essentially just one big fat higher low in the weekly chart off of this gap, right? It's another chart that doesn't have a big time sign. A lot of the charts are lacking a signal. They're pulling into an area that has very nice context in terms of the thesis makes sense, right? But you have to see that buyer or seller appear at that area, right? And we're all kind of just we're all just trying to like predict where the buyer or seller is at right now, because we don't have a mass amount of buyers or a mass amount of sellers on a lot of the ranges on these charts. So it just takes some patience. That's all it really takes, right? You don't want to be all gung-ho into a short week, but a lot of these charts, like McDonald's, like Nike, they're in areas where a really big time trade could really align. But at the same time, it's either just in a consolidation, it's in a time where we need to just wait and see, right? And that's a lot with a lot the whole market, I would say, right? I mean, we don't have a true strong buyer with a lot of volume and a really nice strong price action that's formulating here on BA. We just have a really weak looking pullback from the sell side, where we're getting major rotations from the lows, right? So some of these charts look better than others and have more of a signal, I would say, than a lot of the other charts like McDonald's. But yeah, I mean, there's really not much more to talk about there. I was talking about RTX for a very long time after we lost this level, and then we tried sweeping it. And basically all we did was just trade within the range of that weekly candle, and then we made one more low on the weekly, and it was basically a smaller time frame, like 3 lower low accumulation that was building here. We had a lot of volume down here in this range. We had so much soakage of every single candle, where what I mean by like soakage would be like sellers make like some nice progress, right? With a candle that looks like this beneath beneath a support that was lost that is critical from buyers, right? So you're thinking like distribution or mark down, right? And it's a candle that is beneath a support that looks disgusting, something that looks like this, right? I'll actually make it red, right? And then what happens is like buyers just stick to it, and then like they just trade within that area for so long, and then it makes a new low. So that's buyers, and then it makes one more new low, and we're beneath a huge support. Say the support is this level right here. Okay, and they soak it again and they just trade it within that range. Okay, maybe they pop it a little higher, it drops, and then it pulls a little lower, then it pops, right? And that's all buyers that are, or consolidation that's sitting there, and weak sellers and maybe some decent looking buyers, and then it makes one more new low, and then that low's soaked again. And then you have all of these little red candles here, right here, and over here that are all just soaked. They've all been traded through after they tried to press it down, and then buyers finally get it back above the level. That's what I mean whenever I say soaked. Like they're all soaked up. The sellers tried to press it lower, buyers stuck to the lows of the range and the new lows, and then they just kept bidding it until they reclaim the level, and then that's whenever you get a really nice strong weekly higher low. And that's what has been happening over here with RTX. That's one of those industrials that I was looking at, waiting, never got my signal, never got my true signal up until basically closer to that report, right? And I was looking at this thing in the beginning of December. So that's a little unfortunate, but yeah, you guys can see how the industrials have super clean candles in a lot of the areas over here, right? I mean, you even have them over in LMT, and this name has been absolutely bidless for quite some time. But a lot of the reports are coming up. BA's is not. That's why I'm sorry, BA's is. So in terms of sector rotation, guys, we have so much to wait for. We really do, which sucks, but at the same time, whenever you have so much to wait for, maybe smaller time frame, shorter expiration trades at really important levels can be absolutely insane trades. And I think we're just going to go back into the range trading on the S&P again. I don't think there's any name out there that's just completely primed or completely put in a full on out distribution with QQQ and with SPY. My ideology around both of these names would be we have a window of weakness, a 2-week window of vulnerable opportunity to start thinking about some short side trades. Obviously, breadth is recorrecting through other sectors. We obviously had some nice pops in banks. We've had some nice pops in industrials. We've had some nice pops in what's the other sector we were just looking at? Energy. So those are all 3 different sectors that kind of tie in really nicely into SPY. So breadth could be recorrecting under the hood while we have some tech distribution on the table. That's why I really like the fact that the NASDAQ has an unfilled gap on the election gap down into 492, right? And then we have another unfilled gap at 471.40. So basically what you need to see here, we actually had a dark pool print and like a phantom print that is showing on my daily chart with a wick that doesn't actually exist on intraday price action. And they're trying to bid this thing down into 513, which is the overnight gap fill. It's overshooting the trend line, which I told you guys I totally expect, okay? And then we have a gap in mind for a target that we could use as a gauge with the S&P, which is an unfilled bear gap. So if I could see no strong buyers and then eventually a larger seller popping in off of like this area and above that high, that could be an insane trade. And then like we have a really nice gauge for like a target with this print here on the dark pool down into 513. And then we also have this CPI gap as well, which is from 513 all the way down into 505, right? And we're at 524 right now. So 522 to be actually, but from if you're using that as a gauge and you're looking at like 597, 599.70 up into 601.30, 34 for that seller to then reappear one more time, and then we have a target in mind to then go sweep the gap. Everyone's anticipating a blow off top here where, you know, you break the trend line and then you get above this area and you just go straight vertical. I don't think that has all happened, and they don't have the inventory on hand to do that. They've already been in distribution for quite some time. So whenever we pop higher, we have areas on the chart that are a little bit more liquid that we would probably either sweep or close the gaps off of to then obviously push higher, right? So that's why I really think this could be a target to target trade again on the short, and I could just keep doing what I'm doing with trading the upper range is short, the lower range is long. And we have obviously some other names that, like I said, they're in really nice areas on the chart that we can use context to, like LRCX, like MU, like QCOM, like all those other semiconductor names, right? But I don't want to stray away from the thesis and the fact that NVIDIA can get wrecked and we can catch another short side trade. So there's a few industrials, few discretionaries. Obviously, we have Nike. Obviously, we have the crypto related names that I don't really trade too much, but we're in a very critical area on the SQ weekly as well, and we have earnings a little bit further out. So I'm probably going to add this as a side watch as well, SQ. And then obviously with names like this, you don't need to really put these on your watch list. What I more or less do with names like this would be like, I'll put them on either a side watch or I'll put them like with price alerts down here at 21, because it's not a setup that I need to like have my eyes on during the day. It's just I kind of need alerts, right? Like I'll have some volume alerts and stuff like that. But yeah, a lot of these charts look really, really, really good. It's just going to take a little bit of time to get through those binary events that are going to show the rotations. And we also have FOMC at the end of January, which is also kind of where those earnings are. So yeah, lots to wait for, guys. So I'll probably hop back on tomorrow because I don't want to do all of my scanning and preparation in just one day. But those are kind of like that's basically the broader perspective of what I'm really looking for. We have some other charts with like DKNG, but there's no signal just yet in terms of like if this is going to be a trade that moves all the way back up to the upper extremes of the range, right, where we had a previous distribution up towards like the mid 40s. Do I think it could happen? Yeah, but do I think we could get another pullback and then like smaller time frame daily higher low? I do. I think this chart is ready to go alongside some other growth names, but is this window ready to go, or is it just a chart, right? Environment sometimes means more than just the chart. So yeah, that's basically all I'm looking at. If we take a look at PayPal, never mind, PayPal don't look good. All right, well, yeah, I'm gonna add SQ to the focus. So basically what I'm looking for is like Nike, SQ, probably a little bit of McDonald's, probably a side watch on MO. QCOM over 165, Oxy kind of just digesting properly off of this resistance and holding it pretty well. If we pull back, I'll probably watch the pullback. We have a unfilled gap all open to 54, and I think we test that in this quarter. BA, going to be watching that one as well. Already have some positioning over there. MU, going to be watching that one on controlling the gap. I'm looking for a sign of strength on this level on LRCX. If it wants to pull a little bit into the gap, find its LPS and then move, that could be even better. Something that looks like this, where we have a gap for the downside, and we pull into that, find a higher low and a reclaim, and then obviously move higher. Does it need to do that? No, it doesn't. Could it do something that looks like this? Totally could. So yeah, we'll see, guys. But yeah, I'll probably jump back on call tomorrow. So I'll see you guys.